Hi, this is Joe Rabil with Rabil Stock Research. I'm going to start out with a lesson in ADX, and I think this will be really important because for anyone wanting to use this indicator more, all right, you need to understand these three or four things about it. There are certain weaknesses about it. I'm going to show you the ways that I use it that I think makes it extremely powerful. All right, so let's go ahead and get started with that. All right, I've got the weekly chart of the SPY up, going back a few years, 2, 3 years. I'm going to give several examples using the ADX to just explain how I kind of see it, how I use it. All right, first of all, we have to understand how it's calculated because the key thing to remember is that it's non-directional. It does not care if the ADX line is moving up, this blue line is moving higher, all right? That means that the trend is strong. It does not care whether it's a strong uptrend or a strong downtrend. So if it's rising, it could be a strong downtrend. The way we know the difference is to understand how we're calculating it and what these lines mean. The green line, this plus, is plus DI, all right? And what we're looking at there is the strength of the buyers. It's giving us that indication by itself. How strong are the buyers? All right. And then the red line, which is the minus DI, is showing us the strength of the sellers. Now, you can have weak sellers and weak buyers and weak sellers at the same time. And sometimes that'll happen when we get divergence. I'll explain that in a second, or I'll show you an example of that in a second. But for now, just understand, number one, the first thing you have to understand, just because this line is rising doesn't mean you're in a strong uptrend. You could be going up like this in a strong downtrend, all right? The way we know the difference is which of the DI lines is on top. If green is on top and rising and above 25 and the blue line is moving up, that means that the buyers are strong and it's in an uptrend. All right. Without even looking at the price chart, you can see that if green is winning, red is going down and green is going up, and the blue, and it's the separation between the two is causing the blue line to go up, then we know that that's a strong uptrend. If the red line is on top and the green line is down and they're separating that in that direction, and the ADX line, the blue line, is moving higher, that means that we're in a strong downtrend. All right. Now, I want to give you a couple of examples of how we know that. Let's say we're in an uptrend and we're moving higher. All right. And we're showing good strength. The ADX is showing good strength. The buyers are really showing pretty good strength. You can see the green is holding above 25, and then it dips down under 25, and then it makes another move well above 25. But then it drops down and it can't really get above 25. So we've basically lost a lot of strength in the buyers here right about, let's call it July, August timeframe. All right. Now the market's still moving higher, but I kind of refer to this as it's almost like a plane that is still, at altitude, but it has lost its gasoline. It doesn't have anything in the gas tank left. All right. That's when we lose the buyers. But if you notice, until the sellers kick in, so let me just draw this line sideways so you can see this. If we draw this going sideways, you can see that we kept failing. The red line, the sellers kept failing at the same level. And until they broke here, that was really the sign that we had a problem developing. All right. Or I wouldn't say it. This was showing that we had a problem developing. This was a sign that it was coming to closure. And so that type of divergence where the ADX is failing to confirm can be an incredibly helpful thing. But you have to understand what is taking place here. Green and red are causing the blue line to move up and down. All right. Now, there's some keys also that we need to remember about this indicator. And one of the things that's really important is that it can lag. It can be a lagging indicator. All right. And what that means is that if we have a significant amount of volatility, if there's massive volatility, big swings, huge swings, then this indicator is going to have a very hard time catching up. All right. it's going to have, have a big move to the downside, and you get this massive reading. It's showing a lot of strength in the sellers with the red breaking out, right? Same as what we had here. Strong move in the sellers, and we got a nice strong reading in the ADX here. But when we get a reversal like this that's very sharp, we have to understand that this ADX is going to lag. It's going to have some lag to it. It's not going to be able to catch up to price. So we always have to watch price. We have to see what's going on with price and its relationship to the fib levels, especially when the volatility is very, very high. Once it retraces in a sharp move like this, once it retraces more than 50%, we have to start giving the market a little bit of credit, or any stock that you're looking at. All right, so just keep in mind. So the two things so far that we need to recognize is that the ADX line can go up in an uptrend, and it can also go up in a downtrend. It's telling you trend strength, and it doesn't care about the direction. All right. The second thing is that this line is going up based on one of two of the buyers or the sellers. I have to know which is causing it to move up and which is causing it to move down. All right. And then thirdly, we need to recognize if we've been in a strong uptrend that has been confirmed by ADX and it starts to die out, then we should be on the lookout for a reversal. But that reversal isn't going to take place until the sellers show up if it's an uptrend. If it's an uptrend, then we got to wait for the sellers to actually kick into gear. All right. Now, the final thing I want to point out is that the way I use it that I think is incredibly powerful is I use it as a leading indicator. So how do we use a lagging indicator as a leading indicator? And what I do is I look at the last leg. So if a move is up like this, I'm going to go and see if the ADX confirms that move. You see how we made a move in price and the ADX crossed above the 25 line based on the buyers. All right. So we had confirmation of the move based on the ADX. So then we get a pullback. After that pullback, I'm sort of assuming that we're going to at least come back and test this high because we had confirmation on this time frame. All right. Then we make another move to the upside. We get confirmation in the ADX again. You see how this moved up? And then we get another little minor pullback. And we make another move to a new high, and ADX moves up, and it's staying above 25. Even though it's not going to a new high, even as long as it's staying above 25 through the pullbacks and new highs, then we consider that a positive. Now, we pull back again, and then we move up again, and look at what happens. The ADX drops down under 25 as price is going up. So that's, to me, is a big difference now. All of a sudden, we had a situation where ADX was confirming, but then on the last leg, so now I'm watching this leg as it's moving higher. This leg's going up, and this is not confirming. So I know that I'm not expecting confirmation. I'm actually expecting a reversal. All right. When we get this type of failure, I'm looking for a drop like this. So we want to be, and this actually happened back here too. You see how ADX never climbed above the 25 and then gave it up. Same thing here. ADX kind of died out before it rolled over. I obviously go into a lot more detail in my course, but I wanted to make sure I covered these key things about ADX before you start looking at it. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on the services page right now. You can see at the top, I've got the advanced trend and momentum courses individually priced for lifetime access. Plus you could buy them as a bundle at a discount. And then also the individual package has about 2 to 3 reports each week, plus a special video commentary each week for that package. Also, if you're new to this approach and you want to just learn more about it, you can start with the book I'm offering at a discount right now. My comments are for educational purposes. Please do your own research before making any investments. All right, so I've got the different look to start. I wanted to spend a little time on the volatility of the S&P. So this is from my third course of the trend and volatility. And what I use this for is to give us help us with the market condition and sort of point us in the right direction as to, number one, which time frame should we be trading, and number two, what our tactics should be. Should we be a little bit more aggressive to take targets? Should we be looking to give it a lot of room? And so I like to base that off the weekly average true range using a 18 period MA like this. That's the 18 MA of the average true range. What's that's basically doing is it's looking at the size of the bars. It's looking back 20 bars and it's trying to figure out, are the bars expanding or are they shrinking? Or are they staying smaller? If they're falling, right, then that's typically a good environment. All right, to be a little bit more aggressive, to give stocks more room if you're playing something in that environment. Now, if you noticed, we started, I would say, right around the third, fourth quarter of last year. We started to get an increase in the volatility. This 30 started to rise in this area. All right, so from that point on, you're being a little bit more careful about looking to play big moves, right? We're kind of, it's almost like it's telling us we're running out of time. The volatility is telling us we're starting to see distribution. Increase in volatility typically means that there is an increase in distribution taking place, and sometimes that takes a little bit of time. So I like to combine the volatility signal, an increase in volatility, an increase of average true range in the spider with the momentum signs. And the momentum signs started to drop off, as we mentioned, what I mentioned in the lesson, right? So when we can get that combination, we know we're getting in a little bit more dangerous territory. If I go back, I can show you the same thing happened back in 22. Look at this increase in volatility here, right, basically to end 2021. And we had already seen that, again, based on the ADX, the momentum had died out as well. So it was a good kind of timing tool there. We're always looking for confirmation in price, but this is a really good thing to be on the lookout for. Now, if you notice what happened on the daily chart, we've actually seen a nice decrease in volatility. You see this big drop? This 18 has dropped off after making a pretty substantial move to the upside. And that happened probably right about early May. We started to see the reversal. And so what I'm saying here, basically what this is telling us is that trading plays are okay. But longer term plays are still kind of questionable because this line, this ATR needs to drop down a little bit more. We need to see this roll over a little bit more. So what I would tell you is that we've still got some volatility in the bigger picture, but if you want to do some trades, like we got a pullback to the 18-day, you want to play this for trading purposes, that can be done. Now, this is something I cover each week in my weekly video. Go into detail to just talk about the conditions and basically say, okay, right now we've got a daily chart that is suggesting that you can do some trading. Now, because the weekly is still highly volatile, I would be a little bit more aggressive taking targets. I'd probably maybe even taking smaller positions, potentially not even being a lot more selective because of the conditions on the bigger time frame. So I just thought it was worth spending a few minutes discussing that. All right, let's go and look at this QQQ. And what I think is interesting about the way this is played out, we had this monster drop, right? I mean, this was a pretty significant drop, and we have just V'd out of it. We went through down move, came down to this big round number at 400, happened to coincide with the high from that peak we were just talking about before the bear market started. So we kind of went full cycle, came back to that area, and we've gotten a boomerang bounce. Now the zigzag shows us we've gone straight down and straight up. There hasn't been any intermittent swings. What I would prefer to see, and this is true of the S&P as well, I'd like to see a little bit of a dip here, and test the 18-month and then turn back to the upside. And even a sign of a turn in the zigzag without going to a new high would be very bullish in my view. So we're in this situation now where we've made this long interrupted run, and preferably if I'm going to trade the QQQ at this point now, I'd like to look for a pullback. Now, down at this low, we had a lot of bearishness. Okay, and this is where that is where you look to be a little bit more of a buyer when there's a lot of bearishness and you're coming into support and we're getting an extreme reading in some of the oscillators, right? But now, if I'm looking to buy the QQQ, right, I'm looking for some kind of a little pullback. Now, that doesn't mean inside the QQQ or inside the NASDAQ that I can't find stocks that are pulling back. And if they are, I'd probably be interested in playing those if they set up correctly. This is the kind of the drumbeat of what I've been telling my subscribers now for the past month or two. Look, we need to look for individual stocks. Don't be too hyper-focused on the index at this point. Because it could just continue to drift higher, very possibly. Preferably, we'd like to get a little bit of a test and see maybe even a test of like the 500 area, maybe a little bit below. And I think that would be a really encouraging sign if it survived that. If it comes down from here in a violent way, then we're probably going to form a trading range. All right, but focus on the individual stocks, and I think you're going to be a little bit better off. Now, the IWM is in a different position. It's below the 18-month. Even though it's had a really substantial rally, it's still fighting to get through that 18-month. And unlike the QQQ, this is not showing good relative performance relative to the S&P. So momentum conditions aren't good. We're still hitting at price resistance. We're still hitting trend resistance, and we still are showing poor relative performance. So that doesn't bode well for big, huge expansion in the numbers, meaning a broad-based rally. I mean, we're going to start to see small caps kick in and everything. I don't see that right now. That doesn't mean that it can't evolve, but I think it's going to take a little bit more time based on the way things are playing out right now. All right, let me look at a couple of requests that came through. We've got this AMPX. So, nice move to the upside, and we've consolidated. Now, let's take a hard look at the monthly chart. We've made a move up, and we're consolidating, and we're walking along the 18-month. We're not re-breaking it. I kind of like that. You notice how the 18 and the 4 are like parallel? And if you notice, the MACD line is going straight up. We don't actually have a signal line yet, but the MACD line is going up, and these lines are going down. I call this a counter-parallel signal, and it's one of the patterns from MACD patterns from my course. So we want to be on the lookout for that. I think that's an encouraging sign. Now we've gotten this little ABC on the weekly chart. We've come down, we've rallied up, and we've pulled back. Now it did make a lower low, but it has gone sideways, and these moving averages are coming together, and the MACD's come down to the 0 line. And if you notice, the ADX is holding the 25 line after making a move up to 50. So I consider this a power trend, and I do like what's going on. Now, we've still got a declining 18 weeks, so I would prefer to get maybe a little bit more confirmation, maybe even taking out this little price peak on the daily just above 3. I think if we can make a higher high here, come back up through there, get a little bit more confirmation with the DI breaking out above its prior peak. Pretty good volume pattern, though. Everything here is worth looking at as a potential trade setup, in my opinion. NNE, sort of a similar situation, but I don't like the monthly pattern as much. We don't even have as much history, and we have a kind of a drop and then a rally up. But notice what happened on the rally up. We've given back a lot. I would have preferred to see this hold the midpoint of this big green bar. The fact that we're failing there tells me it might take a little bit more time, and you can see that we had an attempted move on the daily and it's sort of failing. Wouldn't be surprised if this takes a little bit longer, but again, a good stock to keep on the watch list. If this holds the 18 on the weekly and cups around, could certainly be an interesting pattern. I would probably be watching this daily bar. If we can get back above the daily bar, it could turn things to the upside. All right, real. We've got a nice look on the monthly chart. We made a big move up with good momentum spike on the DI, and then we've pulled back. And if you notice this volume showed up after the pullback. I guess that was a bad bar. It was on the earnings, but we're not seeing any follow through from that. All right, so notice what I typically do is I'm looking at the bar, I'm looking at the volume, and it's saying, okay, if this was really negative, then we should have broken 5 and had continuation to the downside. But instead, it sort of stopped there. So it's almost like climatic in a way. We even came back and tested that area and started to turn back up. So almost encouraged by that. We've got a zero line reversal, but it looks like there's a little bit of overrun. Wouldn't be surprised if we have to make a move up and pull back and then go from here. So look for some strength. Probably going to have some problems from this move here, and then look for a higher low to form. And I'd be a lot more interested after that. RGTI is pulling back to the 18. You see this big red bar on the weekly chart. So we had this violent move down, and then it rallied up and kind of failed in this area a couple times. And now look at how it failed again, right? So we know that 15 level is the key. Now the question becomes, can we hold on a pullback? If we hold 10, 11, 10 and a half and cup around, then I would be willing to play this in anticipation of a breakout through 15. But we need to make sure it's orderly. I'm not as bothered by this gap down because the volume really wasn't all that heavy. But we do need to see this. If this 18 starts to roll over, if this stays down long enough and the 18 rolls over, then I would be a lot less inclined to be aggressive in this. I think I'd have to give it a little bit more time. Finally, I got a question on the UNH, looking to play this on a longer term play. The problem is that it's in a downtrend. It violently broke the 18-month, which is now declining. It violently broke the 18-week, which is now declining. And now it's rallied. I know it has a little spike in ledge forming, pattern, but it's below a declining 18-day. I don't see anything that's suggesting that we've truly made a climax yet, other than, a big spike in volume. But I want to see better price action before I'd have an interest in that. Thanks for watching. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about some of these techniques, I would suggest going to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.